But I think we should get started. So, in this session of Village Talk, we are going to be talking about tax and legal planning for cryptocurrency and NFTs. So, this is a burgeoning area that's kind of emerged on the scene in the last, I would say, 5 to 10 years. That's really taken off. I would say even over just the last few years, that's kind of exploded and partially imploded. So, but I think it will be something that will be with us for quite some time, and we're probably just starting to see the beginning of what this ends up like in the future. So, to join us, I invited Alex Roytenberg, and he's a CPA and specializes in the taxation of digital assets. So, thank you, Alex, for joining us. Do you have anything that you want to add in terms of your work and your background in this area?
Sure thing. Thank you, Shannon. So my history, my background is approaching 20 years of tax accounting and finance. Got involved in crypto and Web3, what is now being called Web3, back in 2018, working with a number of individuals and a number of businesses, which has evolved and grown over the last couple of years. And at this point, have spoken and presented on the taxation of crypto, NFT, and general Web3 related items. So hopefully we'll be able to share some of that information with you today.
Great. And I'm so glad to have you here. And just, I forgot to introduce myself, but for anybody who doesn't know me, I'm Shannon McNulty, founder of the Village Law Firm. And this is something that we're seeing with clients as we plan for their estates, of how they can make sure that these assets are preserved and passed down to their children or whoever it is that they want to leave them to, and making sure that they have access to them and preserving their value. So that's kind of how it started in terms of me taking an interest in it. And the tax part of this is also kind of goes part and parcel of managing these things. So, let's just get started because, cryptocurrency is something that we think of as and has been promoted as it's currency. It's labeled as currency, right? And so we think of currency as the U.S. dollar. We can go to the store and give them dollars, and they will give us in exchange some kind of goods or services. So does cryptocurrency is it just like that? Like I can just take my Bitcoin and order something online, give them Bitcoin, and they give me a service. When I do that with dollars, there's no tax implications to that. I just end up getting whatever I paid for. If I do this instead we'll just use Bitcoin because I think it's the most commonly used. If I just do that with Bitcoin, is it the same thing as just paying with dollars?
It's actually quite a bit different. From a tax perspective, or before jumping into the taxes on that, there are plenty of places where online or in person, you can actually pay for goods or services using Bitcoin. It usually comes one of two ways. Either A, the merchant themselves accepts the cryptocurrency, or B, you're able to use a credit card that is directly linked to a crypto account, which would debit your crypto balance, or your credit card processing like Stripe allows for payment using Bitcoin or some other cryptocurrency. So basically on the back end, what ends up happening is they'll convert the crypto to US dollars and the merchant will receive either the US dollars or the crypto itself. From a tax perspective, there is on every single transaction that you have based on the current laws and regulations, every single transaction will be a taxable event. So if you go out and you buy a piece of bread or a sandwich and you're paying for the $5 charge in Bitcoin, There is either a gain or loss depending on at what point in time or what price you paid for that Bitcoin, and then what it's currently trading at. And the delta between the two numbers will end up being either your gain or loss on that transaction.
Okay, so when I go and I'm just going to say I'm going to buy a hamburger with my Bitcoin for $5, and I bought the Bitcoin originally, it was only $1. That's maybe doesn't make sense in truth. But when I say, actually, we're going to say dollars, because I have to just start using, say, these are prices in Bitcoin. So say the hamburger is 5 Bitcoin, which would be really expensive hamburger. I understand. But we'll just say it's 5 Bitcoin. When I first got the Bitcoin, I paid $1 in exchange for 1 Bitcoin. And now the, let's see, no, maybe I paid $1 in exchange for 5 Bitcoin. And now I'm paying for a hamburger. Does this make sense?
So I know exactly where you're getting to.
You know what I'm saying?
There is a calculation of your cost basis in the Bitcoin, and then what is your value or price that you're selling it at today. So let's say you bought it when Bitcoin was $10,000, and you bought 1 Bitcoin for $10,000. That Bitcoin today is, let's say, worth $20,000. So you have a 50% increase in value. So your gain or loss on that transaction is going to be 50%. So what that means is if you're selling $5 worth of Bitcoin to buy that burger, that means that there is $2.50 of cost basis and $2.50 of realized gain.
Okay.
So your
So,
taxable portion, your tax is going to be due on the $2.50 of realized gain.
okay. So I bought the Bitcoin for $10,000 and today it's worth $20,000. So I had an increase of 100%. And so when I go and buy the hamburger for $5, um I have to pay taxes on buying the hamburger.
Correct. There is, based on the rules and regulations as of right now, there would be a tax that's due on the appreciation of Bitcoin when you actually, because what you're technically doing is you're selling a portion of your Bitcoin in order to receive the goods or services. In this example, a burger.
Okay. So it's just like if I traded in my $5 worth of Bitcoin, my Bitcoin for $5. So a portion of my Bitcoin I'm trading for $5, and so I pay tax on that transaction because it's a capital gain,
Correct.
right? Because I'm getting more dollars than I paid for originally with the Bitcoin. And then I'm buying the hamburger.
Correct.
Is that right? Okay. So it's kind of like treating this like as if I owned, is it the same as like if I owned stock and then I sold the stock? I made it
It's
money
the
on stock.
closest. It's the closest correlation.
Okay. So it's almost like if I bought Apple stock and then I sold it, I made a 100% return on my Apple stock, and then I bought the hamburger with the dollars that I
Correct.
got. Okay.
Correct.
But just giving the Bitcoin, even though I'm not technically like exchanging the Bitcoin for dollars, it's treated like that because I'm getting something in return that's worth a certain amount in dollars.
Correct.
Okay. Okay, that seems like pretty complicated to have to keep track of. So every time I go and buy a hamburger, I have to pay tax. I have not only the sales tax, but then I'm paying tax again.
Correct. There is a gain or loss on that
Okay, and how am I
transaction.
supposed to keep track of all of this?
We use software. Some of it we've built internally. Some of it we use that's publicly available. But all of this is basically the responsibility of the taxpayer in order to keep track of what your cost basis is, keep track of all of your transactions, and then go from there.
And do I pay this at the time that I get the hamburger, or do I pay that at the end of, April 15th? When do I pay that? When am I guess,
It's
legally responsible for paying it?
it's part of your overall personal income for the year. So if a person files quarterly estimates, should be included in their quarterly estimates. If they don't, then it would just be included in their April 15th filing.
Okay, so that's similar to, again, going back to the analogy, if with stock, if you like sold stock at a certain time, then either if you pay quarterly, then you have to pay the capital gains with your quarterly estimated taxes, or if you paid annually, then you would pay it with your taxes on April 15th.
Correct.
Is that right? Okay. Great. Okay, so this is becoming a little bit clearer in terms of how these things are treated. Um, what if I am paid in cryptocurrency? What then? Is that like being paid in stock, or is that like being paid in dollars? How does that work?
So it depends on the type of cryptocurrency that you're getting paid. It depends on the nature of the transaction. And then there's also a question, and this is more of a legal question, of whether or not or how much you can or have to be paid in cryptocurrency versus US dollars. So the position that the crypto that you're getting paid is treated as equity depends on the types of tokens that you're being issued, what those tokens are supposed to represent in the sense of um, compensation for services, or is it some sort of vesting in the sense that is there a delay that you have to be with the company or organization for a certain amount of time before you're entitled to those tokens based on a valuation that is today, but you're granted those tokens in the future or paid out those tokens in the future. So that could be considered equity grants or equity compensation. The way that it has, some individuals are getting paid for it as either W-2 or 1099 types of services. People are receiving either Bitcoin, Ethereum, or perhaps a stablecoin, USDC. And those transactions are already being executed. One thing to note is that even if somebody's getting paid in a Bitcoin or Ethereum or other cryptocurrency, and they are a W-2 employee and you need to withhold taxes on them, those taxes need to be paid out in fiat, basically US dollars, as the IRS and just about all the states currently do not accept cryptocurrency for wages or for taxes.
Okay, so when I get, say I'm an employee, and when I get paid, I get a check. Well, in this case, we wouldn't get a check. You would get maybe a transfer of Bitcoin into your wallet. And then in each of those cases, typically, if I'm getting a check, I'm getting paid dollars. My employer withholds a certain amount of those dollars and holds them for the IRS, or gives them to the IRS.
Correct.
So if instead of dollars, then I'm just getting a transfer of, say, Bitcoin into my account, my wallet, then they're not giving a portion of that Bitcoin to the government, is what you're saying.
They would hold back a portion of whatever. So let's say you're supposed to receive $10,000. Your gross pay is $10,000. That would have been, let's make it up, 0.5 of a Bitcoin. And if that's the case, all of the applicable taxes need to be withheld. So instead of transferring 0.5 of a Bitcoin, they'll transfer, let's say, 0.3 of a Bitcoin to your wallet. And then they'll take the 0.2 of what's left over, either take that and liquidate it into US dollars and then pay it to the IRS. So the
Okay.
companies are still required to withhold federal and state taxes and remit that to those authorities in US dollars.
Okay. Got it. So I get the Bitcoin, and then the government gets a share of the Bitcoin, but the employer has to transfer that into dollars, convert it into dollars before paying it to the IRS. You can't pay the IRS in Bitcoin.
Correct.
Okay. Um, okay. So then end up with my Bitcoin, and say then that same day um, I convert my Bitcoin into dollars. I get this my payment of my salary, and then I go ahead and convert that into dollars. Is there any tax when I do that, in addition to the tax already been taken out of my paycheck?
Yes. So let's say you received 0.3 of a Bitcoin when it was valued at 20,000. By the time that you convert it to US dollars, it's gone from 20,000 to 21,000. So there is an increase in value. So you're receiving more in US dollars than you would have from the original transaction. So the additional appreciation would be considered a short-term capital gain.
Okay. Um, so it would be the same as if, yeah, I guess if I had bought the Bitcoin and then sold it again, and
Correct.
then sold it, right? Okay. And so the same thing, if I take my Bitcoin that I got from my employer and it had gone up in the meantime, and then I used it to buy the hamburger, I have to pay tax again.
Correct.
Okay. This is a lot of taxable transactions, I feel like.
Yes, basically every interaction with cryptocurrency is considered a taxable event. The only time that you're not going to have a taxable event is when you're going from US dollars into cryptocurrency. The original purchase of cryptocurrency is not a taxable event. All other subsequent transactions will be a taxable event.
Okay. Okay, so we really have to keep track of all of these transactions that we're doing with our Bitcoin or Ethereum or whatnot.
Correct.
Okay. And currently, you kind of have to do this on your own if you're just doing this with your own, kind of on your own, if you don't have any kind of particular advisors or software to help you with that.
Correct.
Okay. But you have some kind of software to help your clients with this, keeping track of these things.
Correct. We do. We use a number of different softwares depending on types of transactions the clients have, the volume of transactions and whatnot, and then also is it personal or business. Different combinations of those requirements will dictate the best type of software for us to use with the clients. For the vast majority of it, what the software helps to do is they're basically data aggregators. They're consolidating all of your different wallets, all of your different transactions into a single location. And then once you have everything into a single location, we're then able to review every single line item to identify and classify, is this a transfer? Is this a purchase, a sale, a movement from one account to the other, from one wallet to the other, so on and so forth. And then from that, we're able to quantify any sort of gains and losses that would be obtained at that point in time.
That sounds like something that would be extremely useful if you are doing, a good amount of transactions in this type of um,
Correct.
current cryptocurrency. Yeah.
Yep.
Okay, so let's go to the other side of this transaction. So last time I was the employee. What if I'm the employer and I'm paying my employees in Bitcoin. So I transfer the Bitcoin to my employee, and I have to, I guess, sell some of the Bitcoin and give it to the IRS as
Um,
withholding.
so the way that we usually do this is for clients who are getting paid, so businesses that are getting paid in cryptocurrency. We usually have a recommended ratio, how much of those proceeds for them to convert into fiat currency or a stable coin. And then the rest of it they'll maintain in their company wallets or company treasury. Um, and usually what ends up happening is, let's say from that prior example, zero point 0.3 of a Bitcoin would get sent to the employee. And based on the amount of reserves that are in cash, they wouldn't necessarily liquidate Bitcoin. They would just simply use the US dollars that they have in their company treasury and reserves in order to pay the taxes that are necessary.
Okay. So it's sort of, they calculate it based on the amount of the Bitcoin and what the Bitcoin was worth in US dollars at the point at the time where they made the payment to the employee.
Correct.
Okay. And then they'll just use their other US dollars to make to pay the IRS.
Correct.
Okay. Um, and assuming obviously, and I think that's probably important, making sure that you have enough dollars put away to make those payments.
That is correct.
Alrighty. Okay, moving on to, so a lot of people bought Bitcoin when it was very low, and so many years ago, and now it was quite a good investment, to put it mildly. And now they have a Bitcoin that is worth a lot and they paid very little for. So they have a big, if they sold it, they would have a big capital gain, right? Okay.
Correct. Yep.
Mhm,
Go ahead.
okay. And so I think some questions that I get when clients have a big capital gain are, how do we, is there some way that we can plan to minimize that capital gain? Um, One of the ways, probably one of the most common ways, is if you are charitably inclined to gift appreciated assets to charity, um, and get the charitable deduction for that. Is that something that we can do with, let's say, Bitcoin?
Yes. So whether it's a donor advised fund or CRUD or some of the other charitable vehicles that are available, you can use highly appreciated um, cryptocurrency to put into it. And then you'll get your charitable donation deduction to take on your personal return. You'll avoid the current timeline with regards to any sort of capital gains. And then you'll be able to do further personal and family wealth and financial planning.
Okay, so and let's just put it simple as I have one Bitcoin and I decide to um, give it to the Red Cross. So I give it to the Red Cross, and I don't have to pay tax when I do that, right?
On the initial donation itself, correct.
Yeah. Okay. Um,
As long as the entity is a registered 501c3.
right, right. Qualified charity. And then that, however much that Bitcoin was worth, say it's worth one Bitcoin is worth $20,000. So I'm giving the one Bitcoin to the Red Cross, which is about $20,000, and then I can take a deduction on my taxes,
Correct.
right? On my income taxes for about the $20,000,
Correct.
which is the value of the Bitcoin on the at the time that you made the gift.
Correct.
Okay. And how do we are there certain rules for like at what time of day, because this Bitcoin can go up and down? Are there rules for the valuation of that Bitcoin when we're reporting it to the IRS?
We usually take the valuation at the exact point in time of the transfer. And if it's a large enough donation, we request a confirmation letter of the valuation from the organization in order to help substantiate the valuation that we're taking.
Okay, great. So I think it's a good idea then, maybe, yeah, to get some kind of letter from the organization. Um,
Any donations over, I believe it's $5,000, you're required to have the letter in hand prior to submitting the return.
okay, good. So if it's significant, we definitely need to get
Correct.
that letter. Um, okay, and is this something you're seeing that charitable organizations are accepting? And actually, I guess we've seen it, and this was I have read about it with Ukraine, of people sending money for to support the people who are over there suffering from terrible atrocities. Um, and those may or may not have been qualified charities. So I guess if it's so we'll say it is a qualified charity, then is this something that you're seeing of people using their cryptocurrency for charitable purposes?
We've done quite a bit of tax planning around this late last year, when crypto was highly appreciated as well as the rest of the market. There was a number of individuals who did donor advised funds where they put in, call it 3 to 5 years worth of charitable giving that they were planning to do into a DAF, and then they're able to take the donation in the year of the original contribution into the DAF, and then they're able to send out the charitable donations as they wish over a couple of years.
So you're seeing like a lot of like donor advised funds
Yeah.
using it in that way. Okay. Can you tell us if there are I guess there's some common mistakes you see with cryptocurrency of people using this for, I guess, just messing things up and getting in trouble with the IRS?
So with the IRS, the biggest thing is that it's your responsibility to maintain records. Where we've seen people have issues are perhaps a couple of years ago, individuals were using international offshore broker exchanges for different reasons. Not all exchanges grant access to all currencies. So people would use some brokerages internationally. And once the US really started to get really punitive and lock down the brokers for not registering in the US, some of those brokers have either gone out of business, bankrupt. Mount Gov, I believe, is one of the largest ones that might have gone bankrupt. And then the other thing is they simply block any US IP. So you won't be able to get into something like a FTX or Binance, which is outside of the US. So if you're not able to get into the non-US version of Binance, you may have a very difficult time to obtain your original cost basis or transactional records. The way the IRS views it is that it's your responsibility to maintain records. And just simply that somebody else has gone out of business is not their fault or their problem in the eyes of the IRS, and that you, the taxpayer, should have maintained copies on your side. So that is definitely one thing that we're seeing. The other thing that we're seeing is individuals will look at transactions being, well, I bought it for 1 ETH, it went up and down, and then I sold it for 1 ETH. So there's no taxes due. But in reality, when last year, when ETH went from a couple of $100 to call it 4,000, there's quite a bit of gain in those transactions that individuals had in dollar terms. So in the eyes of the IRS, there's gains that somebody had sustained, and as a result of that, they want taxes. Not everybody put money aside to be able to pay those taxes.
Can you explain that again? Because if it goes up, say if I buy it at,
So let's say you buy ETH at $500.
mhm.
ETH then went up to 4,000, and then you spent that 1 ETH where your cost base is $500 and its current valuation is 4,000. You then spent that 1 ETH. You technically have a $3,500 gain on that transaction.
For example, I'm buying a lot of hamburgers.
Hamburgers, or you're going from ETH to a US dollar, USDC, or you're going to go ahead and buy an NFT. The exchange from ETH to NFT is a taxable transaction. So not only are you spending 1 ETH, but you're also incurring a taxable transaction there. And you might have a tax bill as a result of it.
Okay, so the purchase of the NFT with the Ethereum is kind of like buying a hamburger with the Ethereum.
Correct.
Yeah. Okay, so then I have to pay. So yeah, so I think that that's a really good point of exchanging cryptocurrencies from one to the other, because people might not think of that as, well, I've sold it, I've just exchanged it for another type of cryptocurrency. But what you're saying is that the IRS treats that as if you kind of sold it for dollars. Yeah.
Yeah. The IRS looks at the US dollar terms valuation for every single independent transaction. So what ends up happening is that like I mentioned earlier, every single transaction is going to have a gain or a loss, whether it's small or large. The only time you don't have it is when you're going from US dollars into a cryptocurrency.
Okay. So if I exchange Bitcoin for Ethereum, that's potentially a taxable transaction.
It's not potentially, it is a
It's
taxable
a
event.
taxable transaction. Okay. So so if Bitcoin went that my Bitcoin, but if my Bitcoin stayed the same at the same level, say I bought it for $10,000 and it's still at $10,000 when I exchange it for Ethereum, then do I have any tax?
It's a taxable event, but your gain or loss is probably $1 or $2.
So I still have, even though it's this, it hasn't gone up in value, I still have, or down in
Correct.
value, I still have a gain or loss.
Correct, because what ends up happening is every transaction is going to have a gas fee. The gas fee is what you pay in order for the transaction to be validated and recorded onto the ledger. So even if you're transferring 1 Bitcoin or 1 ETH, there's still going to be a little bit more than that 1 ETH or Bitcoin that you're transacting in, that it's going to end up generating either a gain or loss for you.
Okay.
So you're going to have continuously gas fees associated with every single transaction.
Okay. So this is getting expensive. I'm paying the IRS, I'm paying gas fees. It seems like this we have to consider all of these things when we're in making transactions with these assets. Yeah.
Correct. But also at the same time, if you think about needing to send a wire or a money transfer from the US to somewhere else in the world, a wire can take a couple of hours and it can cost 30 to $50 at least. And depending on FX exchanges going from the US to, let's say, Europe, there's a 1% fee on top of it. But if you're sending ETH or Bitcoin from the US to anywhere in the world, you'll have, call it a $5 to $25 transaction cost in gas. And that's basically it. And then once the individual receives it, that cryptocurrency in local country, they can convert it to their local currency, usually without an additional percentage being charged. And if that's the case, if you look at the total cost of the two transactions, especially for large money transfers, it actually ends up being cheaper.
Okay, great. So definitely some of the fees that we pay to our banks, then we can reduce those fees when we're using this the cryptocurrency.
Exactly.
Okay. And how about say, and you use that example of say you're giving it to somebody else. And we'll just use the example we're in the US. Say if I give my daughter 1 Bitcoin, is that how is that treated? Is that treated like it was US dollars?
I mean, there's a couple of questions there. What is the nature of the transaction? What is the purpose of it? Is it for services? Is it purely a gift? So depending on the nature of the transaction, there will once again potentially be a gain or loss.
Okay, so if it's just a gift, like I'm just gifting this for Christmas, uh, then what is that? What is that reported like, or is it reported?
Um, so if you are gifting the individual the Bitcoin, there's two ways that you can transfer it. You could either transfer it at your original cost basis so that the gain or loss is transferred to the recipient, or you yourself can pick up the gain or loss that you have on that transaction, and then the recipient doesn't have any sort of taxable gain or loss on that transaction.
Okay. So if I'm making the gifts, and so is that the same as stock? The
Yeah,
same thing as if I'm like gifting Apple stock to my daughter, then I thought usually that they definitely had to have a carryover basis, meaning that when my daughter sells it, she has to pay the capital gains on that. Is that not right?
you have the ability to pay the taxes yourself, and then the recipient will receive a step up in basis.
Okay. And that payment of the tax adds to the amount of the gift though, right? Is that right?
The tax itself, no.
No, I can pay the tax. Um, the I can pay a capital gains tax on it when I transfer it to her, and then she will get the step up in basis.
Exactly.
Okay. Okay, great. And okay, so up to this point, we were talking. I know you had mentioned NFTs, but I sort of, for simplicity's sake, I wanted to just focus on cryptocurrency. How, so can you explain NFTs to me and how they are different from cryptocurrency?
So the biggest difference between NFTs and general cryptocurrency in the sense of Bitcoin is that an NFT is a single token, usually, that has a corresponding image that it points to. And that image or art is usually correlated one-to-one with the token in question. So an NFT in the biggest terms is still cryptocurrency. Um, each NFT is usually uniquely identifiable. Um, and there's a different value for each particular NFT that's out there.
Okay, so like Beeple, right? This is like
Yep.
the famous one that sold for was 60 some million dollars, like this Beeple NFT. Um, and so why do people do this?
Um,
Question.
so NFTs, it's a different media form. So similar to oil and canvas, sculptures, NFTs is just another media form, is how I'm looking at it. So different artists like to have different mediums. Um, if you're doing it in a digital form, a lot of the artists have been able to add animation. They've been able to add um, different, basically keep the images live instead of just static. So there's a lot of different benefits for the artists. Also, NFTs can be used for other items than just art. They can be used as a membership or gatekeeping for access to different platforms or forms. Um, there's been Gary Vee created an NFT which gave people access to particular restaurants. There's been a more recent restaurant group that recently released in order for you to get priority reservations with their restaurants. Instead of having to book restaurants 12 weeks out, you can book it 24 hours out. You have to be a member by having an NFT. So I think we're still at the very early stages of what NFTs can be used for, and the utility that could be created for it. And we'll see where it ultimately goes.
Okay. Um, and are NFTs taxed the same as cryptocurrency?
Correct.
Okay.
It's all part of the Web3 world.
Okay. Um, so we had talked about a lot about like different the tax rules and sort of how uh, you know this could be pretty burdensome unless you have some good software to keep track of it. Do we see anything on the horizon in terms of changes in how is this kind of going to be how it is, or maybe there will be some changes to what the current rules are? Is there anything on the horizon with respect to changes to those tax rules?
I think there's going to be quite a few changes coming within both just general finance as well as taxes for crypto and Web3. The SEC and the IRS have been very interested behind this. My personal view is the IRS has been watching this for a number of years, and they were waiting for that one big or two big years in which a lot of wealth was created. 2021, there was definitely a lot of wealth created within the world of crypto, and the same looks to still be happening within 22. And I think that crypto and Web3 is here to stay. So I think that the IRS is going to become more aggressive with audits of individuals who are not reporting. The other things is there's been some proposals within regulations coming out of Congress and Washington, in the sense that if a transaction is less than $200, where it was for purchase of goods, a burger in this case, that wouldn't be considered a taxable event. It sounds like that would make it a easier thing to track, but it actually would make things more difficult potential, because you would then need to bifurcate your transactions sub 200, over 200. And is it only for goods or services in the location? Because, well, if $200 is the threshold for something to be considered non-taxable, somebody needs to make $1 million transaction, they'll break it up into $200 increments and go about it that way so that it's not a taxable event. So there's a lot of different variables around that. I think there's also partially a question of NFTs because they represent art in a lot of cases. Is it considered a collectible or capital gains? For our practice, I've taken the position that it's a capital asset. It's actually more beneficial for you from a tax perspective than it is for it to be a collectible. Because the 28% collectible tax rate is required. One of the requirements is that you have to hold it for at least a year. When long-term capital gains can be as low as 15% or even zero, depending on your income. So capital gains treatment as securities would be beneficial from a tax perspective. And then it's also going to be a question of something that a lot of people aren't looking into. We're working with a number of companies is sales tax. Is the purchase or sales of NFTs themselves subject to sales tax? Some of the other issues that we see is that a lot of the individuals within Web3 as of right now are anonymous. And that makes gathering information for tax reporting more difficult. So all of those items, I think are going to be in the coming years looked at, tackled, and hopefully figured out.
Okay, yeah, I think that this is something that we're just on the verge of seeing and figuring out how all of it is going to work. And on my end of it, in terms of some of the legal issues, um, there's a couple of things that I just want to address. One is that, and something that we work with clients a lot on, avoiding probate and making sure the assets get to who they're supposed to go to. And there are a couple of issues that have arisen in that context. One is that currently, if you have an account on Coinbase or some of these other exchanges, I'm really just familiar with Coinbase, but it is really probably the most developed, at least in the US. And you're not able to hold the cryptocurrency, those assets in a trust. So that can be restrictive for both estate planning and for some advanced planning with trust. So it's something to be aware of. Other issues are, and this is unfortunately, we've been seeing quite a bit of this in the last year, of bankruptcy. And what does bankruptcy have? What are the implications of these bankruptcies for the holders and the investors of cryptocurrencies? Right now, I don't think that we can have really any assurance that you're going to definitely get your cryptocurrency back if one of these exchanges goes bankrupt. There are not federal protections like we have for brokerage firms, like we have for bank accounts. So that is something you need to be aware of. And it doesn't necessarily mean not using these exchanges, but I would myself probably personally be concerned about holding extensive, substantial amounts of money in these exchanges. One of the ways that you can protect it is you can take it off of that exchange and hold it in like cold wallet, or hold it in like a physical, it's like a jump drive or whatever, the physical key that you can have. And that's not really helpful for doing exchanges or utilizing it, but is probably safer in terms of protecting it than it is holding it on an exchange, at least at this point. Other issues is intellectual property rights. And it's important to understand, in terms of especially NFTs, that just because you have an NFT on something doesn't mean it's necessarily protected from a legal standpoint in terms of intellectual property. So you want to make sure, like if you have a, say, I have a patent, I don't need a patent, I have an NFT. And I think there's a lot of thinking around that, and that we don't need to go and legally file for this kind of protection because I have it, it's on the blockchain. And that a lot of people may think that, but when it comes down to a court enforcing it, that's not going to be sufficient. Just still the regular legal rules apply. So you want to make sure that you submit it to the patent office or the trademark office, whatever it is that kind of protection you want. So just make sure that you're not relying just on the blockchain, the legal principles, other legal principles, traditional legal principles, and as we've been discussing, traditional tax principles still apply to these. So even though they're new, there are a lot of traditional concepts that still apply. It doesn't mean that you don't have to pay taxes. It doesn't mean that you don't have to, you're not going to end up in a bankruptcy situation. So we just want to make sure that we're aware of some of the pitfalls and that can befall you as well. And somebody has their hand raised, so I just want to Xavier, if you want to talk, I just want to answer that question if you have something. Well, maybe that question went away or was a hand raised by mistake. But if you have any other questions, feel free to put them in the chat or in the Q&A. We had one question about NFTs, which we did address. But if there's anything else, you can feel free to put it in the chat. Or if not, you can feel free to reach out to me or Alex after we finish up here. Alex, do you want to share how our listeners can reach you?
Sure thing. Best way to reach us would be via email. The email address is pretty simple. It's Alex, ALEX, @nft.cpa.
Great. So I think that says a lot in terms of Alex's expertise on this area. Oh, and there was a question. Here's one question in the Q&A. How is intellectual property of NFTs verified for opening and maintaining the privileges of the art? So I'm not an intellectual property lawyer, but I do know that this has been an issue and that people have unwittingly not protected their creations, relying on the blockchain or these ideas that they don't have to do regular traditional legal filings. So I would check with an intellectual property lawyer about making sure that wherever your creations are protected. And I'm happy to, if you want to contact me offline, I'm happy to connect you with an intellectual property lawyer who can help with that question. And Alex, do you have anything else that you wanted to address?
We've been seeing a lot of questions about IP within the space of NFTs, especially with a recent interest in CCO, which is common good on the IP. So there's a lot of different moving parts within the IP world within crypto and NFTs. We work with a number of lawyers that specialize in it. So I'm sure Shannon knows individuals, but yeah, this is the IP side of things. It has been a hot topic as of late.
Yeah, absolutely. That's definitely what I've seen. Okay, well, Alex, it has been an absolute pleasure having you here today, and I really appreciate all of the knowledge and expertise that you've shared, and I hope that has been helpful for our listeners as well.
Sure thing. Happy to be here. Thank you for the invitation.
Okay, have a good one. And again, anyone else who wants to reach out, you have Alex's email address and mine. You probably have in the email that you got this webinar from. So so great. I hope it was helpful, and hopefully everybody has a great day.
Thank you.